Hello everyone and welcome to my brand new YouTube channel, Accounting&TaxSOS. My name is Christopher Cox. And please excuse my handwriting. I have this bamboo Connect. It's about 5 years old and I haven't used it in like 5 years. So the calibration is a little bit off. I'm going to try to get a new one, upgrade a little bit. So just bear with me in the meantime. So this YouTube channel I made so I could help people understand the hard and tough to grasp concepts that are associated with intermediate accounting and taxes. If you guys need help with any other subjects, maybe financial, managerial, or cost accounting, I can help with that too. Just leave a message or a comment down below. Like I said, my name is Christopher Cox. My occupation, I'm a student. I go to a private college, a liberal arts college in Kentucky. I'm a senior. And my qualifications, I've had several classes in business and accounting that make me believe I can help you guys have an easier life when it comes to intermediate, tax, or any other accounting classes. Why am I doing this? Like I said before, I want to help you guys understand topics that were hard for me to understand. There's several things that the book might not point out clearly enough that I know to help you guys save you a little time searching the web. So what is accounting and taxes? That's kind of a hard question to answer in just a couple sentences. Everybody really knows what taxes is, but some people might not understand the fundamentals behind everything really. But it's very simple. Like I'm going to tell you later, the taxes I'm going to be talking about, it's not the boring kind. This stuff applies to you guys, your parents. If not already, it will apply to you guys soon if you're going to college. But I'll talk more about that later. What is accounting? Accounting is it's a very broad topic because there are many different types of accounting. You have financial, you have managerial, you have cost accounting, and you have intermediate two. There's tons of different types of accounting, but it's a way of putting numbers in such a way that they make sense. I'm going to give you guys an example problem real quick, and maybe this will help you guys understand a little bit about what I mean about putting numbers in such a way that makes sense. Okay, so right now I'm just going to do a quick problem, not really a problem, just an example to show you guys what intermediate accounting is kind of like. Alright guys, this is the example I'm going to show you for 2018 income statement. We're going to do some profitability ratios with our income statement and our comparative balance sheet for the years 2018 and 2017. You can see I have sales, cost of goods sold there. We'll be using these to first do our inventory turnover ratio. But I've kind of sped this up just a little bit because it takes a little bit of time to write these out, especially with my bamboo pad. It's a little bit difficult to write with, but it'll be okay. So here we're gonna have our cash accounts, our accounts receivable. We're gonna have our inventory, and then we're gonna have our property, plant, and equipment. Our inventory is gonna be very important to show our inventory turnover ratio, which I'll be showing you soon. And this is the balance sheet. Obviously it has the liabilities and shareholders' equity with the current liabilities, bonds payable, paid in capital. And these right here we won't use too much. Well, for this example we won't use it at all, but if I were using all the different ratios that I could, we would be using those things. But now just writing in some values for these different accounts. bunch of different ratios. Oh, you guys can't see that. Hold on. Ratios. You can't see that either. Hold on. Yeah, you can see it here. Ratios. Okay. Not too good. Hopefully you can understand what that says. Ratios. Okay. So I'm talking about ratios. I'm talking about inventory turnover ratios, average days in inventory ratios, receivables turnover ratios, and all these ratios kind of go together because whenever you're talking about inventory turnover ratio, you're also, to get the average days in inventory, you're going to use that ratio to get your average days in inventory ratio. I'm going to show you an example real quick here. So first we're going to do the inventory turnover ratio. Okay, so to get your inventory turnover ratio, you need to first find your cost of goods sold, which is up here. I can also use different colors for you guys. So your cost of goods sold, COGS, right here, $6,350. $6,350, and we're talking about inventory. So go over here and you find your inventory. Okay, here it is under your comparative balance sheet for 2018, and that should not be 19, that's a 7, because we are talking about 2017. Okay, so 2017, so you have inventory of $820. I'm going to divide that. $820, and then you're going to use your previous years, so 620. You're going to divide those two. $620, and then you're going to divide it by 2 for the 2 years. Okay. Then you'll get a product of 8.82. What does this number mean? This number is the amount of times your inventory is turned over during the year. So what I mean by turned over is the amount of times that your inventory is sold during the year. So like I was saying before, a lot of these are interconnected. So if you go down, you average days in inventory. To get your average days in inventory, the Q cannot read that. Average days inventory. So you would use this product here, 8.82. You take 365. $8.82. And then it's that simple, and you get 41.39 days. So here you can calculate the average time that your inventory is in your warehouse, and this is pretty important because the amount of time you keep your inventory is crucial, because you're tying up your money. When you keep a lot of inventory, you're increasing your expenses, and it's overall not good to have an inventory for a long time. It's good to have short inventory time periods. But this is the kind of stuff that we'll be talking about and discussing more in depth. And if this is an interesting topic to you guys, there's tons of other ratios for inventory, for profit margin, for the average collection period on your accounts receivable. There's a ton of other stuff that you can do with just like this balance sheet and this income statement and this balance sheet over here. But you can learn a lot from these different accounts and how these accounts correspond with each other. But yeah, I just wanted this to be an introduction to my new channel. Hopefully you guys like it. Hopefully this will help you guys, because that's the only reason I'm doing this, is to help you guys with stuff that I personally had trouble with in my classes. And I would also like to mention that it also says taxes, so I will also be helping people understand some of the complicated topics in individual income tax. And this is not boring stuff. I'm picking interesting things that will apply to you, I promise. If not already, they will in the future. They apply to your parents because of you. And if you guys are participating in the stock market, futures market, commodities market, whatever, you guys will want to know some of this stuff, because I will be just discussing capital gains, capital losses, how you can use your losses to hedge or to combat your tax liability. But this will be a good course for many people. Hopefully you guys will continue watching. If you guys want to subscribe, or like save this video for later, you can access my account that way and see all the videos that I post. I'm going to try to post as many videos as I can. If you guys have any suggested videos or suggested topics I should make a video about, just let me know, send me a message, leave a comment, and I'll make that suggestion my priority for my next video in queue. Thank you guys so much for watching this video, and I will be looking forward to your subscription and making videos for you guys. Alright, thanks a lot. See you guys next video.